Banks lend money into existence, governments print money into existence, and with the supply of dollars and other fiat currencies, increasing ever more, the question is, well, how do you get ahead?
Welcome to Make Your Move, the podcast that values insights over immediacy. We have a great podcast episode for you today. We're going to be talking crypto, one of the hottest topics in markets. And to do that, I have a special guest, Phil Tambyah from Blueberry. Phil, great to be with you. Thanks for joining us.
Thanks, Pete. Great to be here.
Now, you've got an interesting title. You're the Technology Risk Manager. What does a Technology Risk Manager do, and why are we talking crypto today?
Right. So look, Tech Risk Manager, it's all about internal controls, cybersecurity, making sure the platform, Blueberry, is nice and resilient for our traders.
So you're a techie?
Somewhat. I sit between tech, compliance, and a bit of crypto analysis on the side.
I think we're all turning into techies with the way that the world is evolving. And today we're going to be talking about probably one of the hottest areas of the technology space, the convergence between technology and money as we know it.
Yeah.
Crypto. How did you come into crypto? What's your relationship been like, and how did you develop, this specialty which we're going to talk about today?
Sure. So look, my first exposure was in 2011 during high school. We were sitting around the lunch table playing a World War II strategy game that we'd invented, a bunch of nerds on their lunch break, and someone brought up the concept of Bitcoin. Now, unfortunately, at the time, it was around $4 or $5 US, and I said to some effect, why would I pay $4 for a dollar? Because I simply didn't understand money. It had no network effects. There was only one exchange. Globally, it was Mt. Gox, which obviously failed in 2014. There was really nothing to it at that time. And I promptly ignored it for about 6-7 years. There was the bull run of 2017, dabbled around a little bit, took no real serious look into the topic. And it really wasn't until 2021 where I started to sit down, research the history of money, take on the Austrian School of Economics, understand money is a commodity, and start allocating.
Quick pause before we dive into this episode, which is brought to you by Blueberry, the online trading platform built for pro traders. Whether you're diving into gold, riding momentum in indices, or fading to Dixie, precision is everything. That's why Blueberry's razor-sharp spreads and millisecond execution speeds means you're positioned when you're ready to execute. Trade CFDs in Forex, commodities, indices, and crypto, all from one intuitive platform backed by real humans. And with Blueberry's tight pricing, trading tools, and dedicated 24/7 support team, you're never alone. So when you're ready to make your move, make it with the broker that moves with you. Learn more at blueberrymarkets.com. That's blueberrymarkets.com.
This podcast contains the ideas and opinions of its author and is distributed on the understanding that Make Your Move is not rendering investment, financial, legal, accountant, or tax advice. The ideas outlined may not be suited to your financial circumstances, and therefore you should get financial advice from a competent professional. The author specifically disclaims any responsibility for any liability, loss or risk, personal or otherwise, which is incurred as a consequence of the use and application of the information outlined below.
I want to talk about your experience. I think you have Sri Lankan heritage, is that right?
I do, yeah.
And what's, the context for crypto, and to understand crypto, we can talk about crypto from Australia, the US, the UK, very well banked economies. But what's it like? What's crypto done for developing economies where the banking system is not as open to everybody?
Yeah, look, in Australia, we're very lucky. Everyone is banked. Banking services are great. It's all technologically enabled. That's not the case, unfortunately, in a lot of the developing world. And for me, let's say wind the clock back 50 years, right? The Sri Lankan rupee was, somewhat floating against the US dollar at a ratio of about 6-1. If you go back far enough today, it's at, 300, 400 to 1, depending on the month. Right, the Sri Lankan rupee has lost something like 95, 97% of its value to the US dollar in that time period. And in that time period, the US dollar itself has lost about 99% of its value from say $35 an ounce in 1971 to close to $5,000 an ounce today. It's lost 99% of its value to gold. Right, the main reserve asset of the global reserve asset. So in terms of say the use of crypto in these developing markets, one is the store of value. That is very clear. The second is, well, if you have a collapsing currency, what do you store your value in? And for me personally, going forward at least, it'll be Bitcoin.
But it's not just a store of value, right? Mm-hmm. Like, for example, if I want to send you $50, I can do that with my bank to your bank here in Australia. It's not a problem. But in a lot of these unbanked developing economies, which make up huge population bases, probably the majority of the world is unbanked to an extent that it is. Crypto is becoming the way to exchange and value. To pay for things, right? So your average person in Africa and a lot of economies doesn't have a bank behind them that they can just go and open up a branch, get internet banking, and they're starting to use crypto now as a way to pay for things, right? So there's crypto crypto as money and then crypto as the store of value, right? Two very different things. How does that sit with you? Is that the same way that you distinguish between the two?
Yeah, look, I mean, like, let's say you take the developing world. Everyone's got a smartphone. It's actually a bit of a status symbol as to how good your smartphone is. Do you have the latest Samsung or iPhone? But all of them have the access to that type of technology. They all have access to digital wallets, Web3 enabled devices, where they can store and transmit value in between each other in an unbanked or underbanked environment. You might go to a local merchant and rather than pay them cash or pay them digitally through their bank account, just pay their phone in a wallet. It's very simple. The transaction fees these days are very minimal. The settlement is effectively instant, and you can have commerce outside of the banking sector. Just between in your community.
I think this is really important because a lot of time when we talk about crypto, it gets confused with the speculative nature of certain crypto assets relative to dollars. So I can be a big believer in crypto because of the technology, because of what it allows someone to do in country A, send money to country B and open up and decentralize and everything else, but not necessarily be bullish on the outlook for Bitcoin, right? I can be a believer in crypto, but still think Bitcoin's expensive at 70 or 80,000, right? So we're separating the speculative element of the value of crypto from the application and real world use of crypto. Let's jump into something that you touched on, that analogy of how much the Sri Lankan currency has lost value over time. How does that apply to all currencies, all fiat currencies?
Sure. So I'm not an expert in the rate of change with the Sri Lankan rupee, for example. But in Australia, we use the Australian dollar, the M2 growth rate, the broad money supply, if you want to interpret it that way, grows between 7 and 8% per annum. Now, let's say you're able to get 3.5%, 4%, maybe 4.5% by having that money in a bank account, a term deposit, long term. That's still a 3 to 4% differential in terms of purchasing power you're losing every year. As the supply of the currency expands, the value of the currency itself depreciates, right? That's why housing here is so expensive. It's why the stock market is valued the way it is. That is amplified many times worse across the developing world. You're looking at currencies that inflate in the supply, could be 10, 20, 30, could be even 300%, depending on which jurisdiction you're in every year. So the question is, how do you store value in that environment? I mean, there's examples in South America, for example, where people store value in construction materials. Like, let's say you want to build a house. You'd much rather convert your paycheck to bricks for your house today because you know that the cost of bricks are going to go up by 50%, 100% 6 months from now.
Well, the paper's worthless.
Exactly.
It's anything other than paper because paper can just be printed.
Yeah.
Right. My grandma used to store her cash under her bed and buy gold with it, right? People have been doing this for thousands of years, moving out of paper into something that is what we call a hard asset.
Yeah.
A lot of people will come and say, oh, look how expensive real estate is, right? The average price of a house is now $2 million, for example, whereas 10 years ago, it was $1 million. The house hasn't changed The house hasn't gone up in value. The dollars
Yeah.
have become less valuable,
Yeah.
right? And that's a very important concept that a lot of crypto traders and crypto early adopters have understood.
Yeah, and the reason for that primarily is because Bitcoin itself is a hard asset. You've got a fixed supply, 21 million units. It's impossible to expand the supply. If you look at, say, gold as the money for thousands of years for our society, the rate of change in terms of the supply growth of gold was about 1.5%, and that's been fairly constant through technological change throughout thousands of years. That's why it has retained its value, simply because it's physically scarce. Bitcoin translates this scarcity into a digital commodity, where the supply is fixed over time and the issuance rate logarithmically depreciates over time. So right now, the inflation of the Bitcoin supply is at about 40 basis points per annum. Basically, your Bitcoin today relative to the supply tomorrow is going to be worth, 99.6% versus the dollar. You have a dollar today, it'll be worth 93% of what the dollar next year is worth.
Okay, let me simplify this for someone that's watching and wants to dabble or diversify into cryptos, but just wants to understand that point, right? Because you're a tech guy, you've got a technology background, and some people might not understand the technology or not be as comfortable. Correct me if I'm wrong, but would you summarize crypto as a computer programmed, a code that's programmed by a computer and then is tradable between people or can be exchanged, and that code itself provides the rarity, provides the limited supply, provides the mechanism of which how I can send to you and you can send to me, and rewards and all that kind of stuff? Is that a fair way to simplify it?
I'd probably put it in the sense that it's, at least the Bitcoin network, is a decentralized set of nodes, people operating computers to maintain the ledger of transactions.
Yep.
The node operators enforce the rules, and the rules are determined by the code. The code itself is enforced by the network in terms of its scarcity, its transaction rules, the ability to reject false transactions. If anyone tries to double spend assets on the network, it's blocked. And that's simply because the rule set is enforced by those who are contributing towards its security.
So when I buy Bitcoin, I buy it, I put it on a wallet. It's called the digital wallet. I now become a part of that node network, right? Or I plug into a node that is connected to the Bitcoin network.
Yes.
So I'm contributing in a certain way, and it's like me going to a bank branch and then that branch being part of a bigger bank and then those banks being part of a central bank system, central banks. It's a kind of similar concept, but we're now talking about something that's decentralized, doesn't have governments in the middle, doesn't have companies in the middle. It's really peer-to-peer.
Yes, yeah, and that really is the value, right? Do we need banks going forward? Debatable.
Okay, cool. I think banks have had a great use case. I think banks provide a lot of service, but what's happening is all the things that the banks used to do are now being separated, and banks are slimming down. They're still very good at the things that crypto can't do yet, but we're moving into a world where people have more control over their money, more control over the way they transfer. You used to have to, if you were working in South America and sending money back home, or if you were working in Dubai, you had to pay probably a 10 or 15% clip to Western Union.
Yeah,
you can now do that with USDT, with Tether and other stablecoins, which we can talk about.
For sure. If you're talking about stablecoins, that will be one of the defining narratives of the next 5-10 years in finance. What I personally see happening is the store of value layer in these in these developing economies shifting from their own currencies, which are inflating at a rate of knots, shifting to, say, more stable currencies like the US dollar through the use of US dollar stablecoins. Maybe not so in the West, but definitely in emerging economies.
Phil, I want to ask you about 3 different types of crypto outlooks. First one, I want to focus on Stablecoins, which you spoke about. They're basically like exchanging money, right? Like exchanging US dollars. Let's do that last, and let's go to probably the third bucket, not the Bitcoin and the big ones, the small coins. You know, people really talk about, I heard someone talk to me about this project or that project and they lost all their money and this is so volatile, and what do you think about this crypto that my taxi driver or my Uber driver has tipped me? Summarize for me what's happening amongst the smaller projects and how they sit with you as an investment option. Are they like a speculative mining stock or a speculative biotech stock to you, analogy wise, or do they actually fit into a bigger portfolio?
I don't see them in a portfolio allocation at all, quite frankly. Personally, I see them as almost pure speculation. There may be utility with respect to certain projects, and I'm sure I'm going to offend a lot of people potentially working on or investing in those type of products. But personally, I don't see the investment case.
So stick away from the tip that the Uber driver gives you. Where do you draw the line to the investment credit worthy, let's call it the quality cryptos? We'll get to Bitcoin next, but let's fill in that middle layer. Where do you draw the line personally?
Look, personally, I don't consider anything outside of Bitcoin, but that doesn't mean to say that they're not investable. You take, say, Ethereum, for example, number 2 in terms of market cap. That will drive a lot of the adoption in terms of the financial sector, stablecoin adoption, and so on, and their particular sort of, let's say, the scaling layers of the Ethereum network. And similar to Solana, right? That is, I think, number 3 or 4 in terms of market cap, and in terms of, say, transaction volume, has very significant utility. I would say that a lot of that utility itself was completely degenerative behavior. The meme coins and so on, they were basically, that craze was almost purely based on Solana and its network. So, there's also exchange tokens and so on, like the likes of Binance and a few others. They have their own token representing effectively a share in the exchange and their network that they operate. Personally, I'd prefer to invest in Coinbase, which is a regulated, NASDAQ listed company, if you wanted to gain exposure to say the crypto exchanges.
I think, I do love Bitcoin because it is kind of the gold class. And I think, if you're going to propose, you want to buy a gold ring, not a silver ring, right? You'll be in trouble if the ring that you buy doesn't have a nice diamond and it doesn't have nice metal around it. So for sure, Bitcoin is always going to be that gold class in the cryptos. But as you mentioned, Solana has innovated a lot. It gave a lot of developers an opportunity to create and innovate. And there are a lot of cool projects happening in crypto. I think for me, my guide is I like to stick to the top 10 or the top 20. Bitcoin's always going to have its prominence, but there's times to sell gold too, right? I mean, gold wasn't really going anywhere in the 90s and now it's hot. And if you sold it at 5,400 and bought it back at 4,200, that you can trade gold also, you can trade land, you can trade the things that are valuable, but there are always, exciting things happening. Another project that I like is Zcash, for example, because to me it has Bitcoin-like qualities, but it brings in a layer of privacy. Are those things, do you look at those things but you're just not convinced because Bitcoin for you is that gold class, or do you completely ignore them for an investor that's trying to build a portfolio, trying to decide what to trade?
Look, I mean, I personally ignore them, and purely for the reason that Bitcoin didn't have a insider, a series of insiders who were allocated tokens from the distribution of the actual supply. You look at, say, Ethereum, for example, something like 60% of the tokens making up the Ethereum network were given out to pre-seed investors from 2015, 2016, right? So you're talking about a highly concentrated asset class where the insiders got in early, they made the right bet, congratulations to them, and they got mega wealthy. Bitcoin didn't have that, right? And if you go down the line in terms of every other of the altcoins, it's basically the same story of, there's a bunch of insiders who have effectively control over the supply of that asset, if you want to call it that. And that's why I don't invest in them. Now, with respect to the utility, you have amazing utility, like Zcash in terms of, say, its privacy. You look at the ability to use as a stablecoin rail for Ethereum, Solana, and so on. I definitely believed in those as an investment in utility. But what I would say to that is that technology is deflationary by design. Margins compress, and the value accrued in terms of that deflation accrues to the user. Like, let's say that you're a person who wants to use their US dollar stable coins effectively and cheaply, that those fees are coming down, right? So effectively those use cases, I see those I see the capital being allocated to those use cases reducing over time, and the technology being democratized, fees reducing, and then unfortunately the value relative to the overall ecosystem of those utility, or I would say the utility coins, I see those dropping, unfortunately.
What do you think about Bitcoin's price at the moment? Do you think, obviously we've seen a lot of volatility. It's trading below its 200-day moving average as at the time of this recording. When Trump came in second term, there was a lot of euphoria about Bitcoin and it rallied, and you're always hearing these predictions, Bitcoin to 1 million, Bitcoin to the moon, but it's actually been a pretty poor performing asset class over the past, say
6
12,
months.
say 6 months. If you had gone in and blindly just bought it, you would have lost money on it. There's been volatility at times. A few years ago, Elon Musk was tweeting and moving the market, and it has its vulnerabilities, right? I don't want to detract from its beauty, but I also want to highlight its vulnerabilities. And where does that sit for you now in terms of value?
Sure. Well, look, if you look at all of the traditional models in terms of valuing Bitcoin, whether they be on-chain models or whether that be traditional finance models, it is effectively in a lengthy bear market. It will take months, if not a year or two, to consolidate and for price action to resolve, hopefully to the upside. That is what it has historically done, gone in a 4-year cycle, and we are on the downswing of that at the moment. That can't be denied. In terms of, say, an entry point into the market, right now, as of this morning, about $70,000. It is as undervalued on a relative basis as it has been since the sort of coming out of the 2022 FTX bear market and into 2023. I can't give financial advice, obviously. It does look like an attractive entry point. And simply what I would say to the upside is that, you have the likes of Larry Fink heading up BlackRock and $12 trillion in assets, saying that it's going to $700,000. You have Fidelity allocating or recommending an allocation of a couple % of your portfolio to Bitcoin specifically. Bitcoin itself, it's about 13 to 14 basis points of global wealth. So it's a microscopic asset class, a market cap of 1.4 trillion at the moment, and overall net wealth of the globe at around 850 trillion. So, if it does capture even the slightest of institutional flows and, becomes part of, a standard portfolio allocation, even if it's only a couple of %, I would say the price rallies higher. You can't give a price and you can't give a time in terms of prediction, but I would say over the long term, higher, and in the medium term to short term, sideways, we'll see.
I want to ask you about something interesting that's happening is the evolution of traditional money and wallets and payment systems and starting to integrate Bitcoin and crypto. I remember during the pandemic, I gave my daughter $10 on a crypto wallet and I said to her, you can buy whatever you want. And she bought Dogecoin at $0.01 and it went to 70 cents and her $10 became worth $1,000. And for her, she was young and that was a very transformational moment where she learned the power of crypto and exchanging. And then every time she asked for money, I said, you have to subtract it from your wallet, right? So I helped her develop this concept. But we're seeing a convergence not just on that level, not just at the trivial level, but big businesses moving into payment systems where merchants can accept FPOS and Visa and MasterCard credit and debit, but then potentially exchange that into crypto, right?
Yeah. Yeah, look, that is a massive development in the last, I would say, 2 years. It's the convergence of traditional financial rails and the decentralized financial ecosystem. You look at, say, MasterCard, maybe a couple of weeks ago, announced an integration with BVNK for $1.7 billion US. They're a massive infrastructure player in the stablecoin space. You look at, say, Square. As a division of Block, the point of sale system that you pay for your coffee with.
Yep.
They recently rolled out Bitcoin acceptance at to 4 million merchants in the US over the next year or so. There is this intent from the traditional TradFi market makers and players, banks and so on, simply to ensure that they can grab a piece of this action.
You know, for me, it's not necessarily, if I was selling coffee, if I was selling food, it's not necessarily being paid in Bitcoin, but it's them putting my kitty or putting my treasury into there. Instead of it sitting in a bank that doesn't really care about me, that screws me on rates, I can, for that hard-earned effort that I've been paid for, I can then go and put that into an asset that is potentially going up in value. That's really, really cool, right? At a overall economy level, that's going to bring in so many business owners, so many people into the crypto economy, and just further embed that storing your wealth instead of it at a high street bank. You can actually put it in crypto.
Yeah, and I think Michael Saylor of MicroStrategy is a real influencer in that movement. The idea that as a business you have more than just the cash in your bank, you have the ability to generate or construct a corporate treasury. And what assets go into your corporate treasury? Is it just cash? Potentially not. Why couldn't it be Bitcoin? His business is $70-80 billion in market cap at the moment, simply because he decided to add Bitcoin to his treasury about 5 years ago, and he's financialized his treasury since then with preferred offerings and so on.
Another area that's really cool, I think, is AI agents. We're experimenting more and more. We're going to have all these agents working for us or doing things for us. They're going to have to spend money, right? And I don't necessarily want to give them access to my bank, but I could potentially give them access to a crypto wallet and tell them to go out and, I don't know, pay my bills and order some food for me or run a campaign. How's that evolving? Because I know you have a payments background.
Yeah.
And what's happening in this agentic crypto convergence?
Yeah, that this will be one of this will be a defining narrative over the next 10 years. It's the AI agent economy. If you say take an agent, it will need to have some level of commerce attached to it to conduct any activities, trading back and forth with other agents, trading back and forth with businesses and so on. I see it as a multi-trillion-dollar economy, say 5 to 10 years from now. The question for the agents will be is, well, firstly, how do they transact with each other? And I think that's probably going to be on stablecoin rails to ensure that that there's very little volatility in terms of prices day to day. That's the medium exchange narrative. The question is then, well, what is the store of value narrative? These agents, they won't have KYC access to bank accounts.
Yeah.
They will have access to digital wallets. And I personally think that they're going to store their value in Bitcoin as the longest duration asset imaginable.
So we've gone from paper money, $5, $10, $50, $100 notes to digital money, which has basically been our banks holding a ledger and saying, here's your bank account, your BSB, your Pay ID, to crypto wallets, being able to move money in and out. And then it's going to agents managing our money and their money completely on decentralized. It's amazing how much it's evolved over the last 10 years. And I think the growth is only going to be much, much bigger, right, than where we are at the moment.
Yeah, I mean, look, the crypto economy has say $2.5 to $3 trillion in market cap at the moment, factoring in your Bitcoin, stablecoins, the utility tokens, the meme coins, and so on. I think that increases by an order of magnitude over the next 10 years, and I hope to look back on this episode in 10 years and think, well, he was right. I guess we'll see.
Okay, let's move into closing positions. Let's round out, Phil, and put a bow on what we've spoken about and get into the meaty part. Summarize for me why Bitcoin is still your number one, your one true love, top of your list, the gold for you, the gold standard, even at current pricing. Why are you so attracted to it?
For me, it's just the apex store of value through time and space. The longest duration asset, the hardest to seize, the easiest to transport, the most divisible. For me, it ticks every box in terms of the sound money school of economics under the Austrian school. That's for me why Bitcoin specifically.
Okay, what if you couldn't buy it?
Yeah.
What if it disappeared tomorrow? Or someone bought them all and you couldn't buy them? What would be your number 2 or number 3 on your crypto shopping list?
It wouldn't be a crypto. Quite frankly, there are only 3 scarce assets in this world other than your time. The first is land at a multi-$100 trillion valuation. The second is gold at today's price is about $30 trillion in valuation. And the third is Bitcoin at 1.4 trillion. So if I couldn't invest in Bitcoin, it would have to be land or gold, depending on what I could buy.
What about stablecoins? You would have moved into stablecoins and used them as a stabilization storage of wealth?
For me, it's there's no capital growth. They're stable for a reason. You could say invest in infrastructure players in the decentralized finance economy. Circle is a great example of a stablecoin issuer with a really investable use case. But no, personally, I wouldn't invest in stablecoins specifically unless I had unless I was earning it in a collapsing currency.
Okay, Phil. Last question before we go to one of our listener questions. Where does crypto fit in an overall investor's allocation? So if somebody hasn't had exposure to it, they're looking at introducing it, they're looking at kind of like getting some crypto in the portfolio, having some type of exposure, how big or how small relative to the overall pie?
Sure. So the conventional wisdom at the moment is to use, say, Bitcoin specifically as a portfolio diversifier, simply because it has an incredibly high Sharpe ratio, being the risk-adjusted returns, and historically speaking, it has been negatively correlated to other assets. Unfortunately, today it is treated as more of a tech play, and it has become very correlated with your higher alpha, higher beta tech names out there. For instance, Nvidia, for example. In terms of what I would personally, no advice, obviously, but my approach would be to have it as a more material part of your portfolio.
So material means greater than 10%?
Yeah.
Right, so how much is that? Is that 15, 20, 50, 80? That's a big range.
It really depends on your risk appetite. If you have a very long, say, market cycle or a long time horizon, you could definitely go much higher than the 10 to 20%. If you need your cash sooner rather than later, then the volatility might not be for you.
I think the way I like to think about speculative assets is a barbell strategy. So I like to have the majority of my exposure into what I consider to be the safest. And then I don't mind having a little bit of exposure to something that I'm prepared to really go up and down, right? And I tend to cap that at where interest rates are. So if I can get 6-7% of my money, I'll allocate, that speculative nature 6-7%. If I can get a higher return, but I think 5, 10, 15%, I think it's a nice asset allocation to start off with. And then like everything in life, you can grow with confidence, right? The more you know it, the more you understand it, the more you feel comfortable with it, you can start to layer in.
Yeah, definitely. I mean, I would say that, in the sort of 5 to 15% range, if you're, say, in your 20s or 30s, is not unreasonable.
Phil, awesome. We've got to get you back because I want to kind of like see where Bitcoin goes. and I want to come bring you back next time. It's either going to be higher or lower. So we're going to be either talking about how fantastic this time was to buy or what's happened, and maybe I can twist your arm into a few other cryptos. Don't think I'll be successful, but I'll keep trying.
Nice.
And we'll get you back. But before we finish up, we're going to go to a listener question. Question: I've got a long-term Bitcoin strategy, but I keep reading about traders going through long and short. How do you approach short-term setups alongside that? Long, short, what's going on? What do these terminologies mean, and how should someone be thinking about that?
Personally, I don't touch my my long-term allocation. I have the conviction in it to hold over the next 10 years or so. I plan to use actually my Bitcoin, say 10 years from now, in a more productive capacity. Let's say it's collateral against a mortgage, or just simply selling it for something more tangible that I'd like to own. In terms of a more short-term, say, strategy, I look at movements in the market, the current macroeconomic conditions, and then I'd simply hedge my risk accordingly using some sort of like levered, say, CFD trading, using against the price action of Bitcoin. So let's say that we're currently in an energy shock and there's a bit of an oil crisis going on. If I see the near-term down risk to the downside, I'd simply hedge that position and then exit that if the market were to drop. I look at my short-term, I guess, trading as insurance to scalp a little bit of extra return, in the opposite direction to my spot position.
So hashtag never sell. Are you one of those diamond? They call them diamond hands or diamond eyes?
Diamond hands.
I've seen them on X, on Twitter. They make them the display picture. You're one of those guys, right?
Not quite. Look, you own an asset for it to give you freedom in the future. Whether that's, say, your own home, whether that's just, the ability to convert to cash and then use it as money itself. The whole point of investing is to set yourself up for a brighter future. There's no point in taking something you can't hold to your grave.
Awesome. Well, mate, thanks so much. You've given us some really good insights. What we really wanted to do was bring out the crypto narrative, the crypto story, help a lot of people that are in markets, maybe on the sideline, not too sure, develop more of an understanding. And it's a journey, right? It's not a destination. We want people through the podcast to continue to learn, to continue to expand. You've brought some great insights today into crypto. No doubt you're a big believer. I think next time maybe we'll get you in a big Bitcoin t-shirt with one of the Bitcoin hats. But final word, final message to someone that's sitting on the sideline, wants to get a bit of exposure to crypto, maybe wants to trade it, maybe wants to hedge against their position but not too sure. What are your words of encouragement or reassurance?
The first thing is to simply learn about money. I had no understanding of a credit-based monetary system 5 years ago, and an understanding of how the monetary system works drew me to, well, how do I take advantage of it? And that being Bitcoin.
A lot of people haven't thought about what money is, right? They just know there's money in their account. Yeah. They spend it, they receive it, but they haven't actually thought about what it actually is, what it means, how it behaves, and how it impacts their life. Some great final words. Thanks so much for joining us. And remember that we are here to help you. This podcast is here to help you. So if you do have questions, make sure you leave them in the comments. We're going to read them out in our future episodes, and we're going to continue to bring you guests like Phil that are opening up your eyes, bringing you insights, because we are the podcast that values insights over immediacy. Until next week, thank you. Like, share with someone that you think will find this useful. Thanks so much.
This podcast has been powered by Blueberry, a licensed CFD broker. For listeners based in Australia, Blueberry holds AFSL 535,887. You should read the PDS, Client Agreement, and FSG. For clients based elsewhere, Blueberry holds a full-service dealer license with the Mauritius FSC.